Good morning. It's nice to be here the first day of the summer. I'm Nicos Koulis, as was mentioned, and the subject of, of this topic is, can private equity help some of the problems of the Greek economy? So let's try to define what private equity is first. Private equity, as I understand, is one of the elements of the capital market system in most of the Western countries. Essentially is one of the tools that decides that the money is going to be invested in this investment and not the other one. In Greece, by far the largest component of the capital markets is the commercial banks. We don't have much of a private securitization market as in the US or others. So banks is sort of 80% of the capital markets. Of course, we do have, or used to have, a stock market, which these days is in a coma. And there is a very small sort of private equity sector. Now, private equity is, again, has some characteristics that I think we should put on the table so we understand what we're talking about and how could it help the Greek economy. First is, as the name indicates, it's private. It is not public money. It's money that are contributed by either wealthy individuals or large institutions. Secondly, it's long-term. I don't know of any private equity firms that sort of put money, invest somewhere money in order to get it in a day or a month or even less than a year. Normally, the private equity has a several years horizon. Thirdly, it usually focuses on riskier investments, and as a result of the length and the riskiness of the investments, usually investors require high rates of return. In addition to those characteristics, now coming to some other stuff that has more to do with whether it can help the Greek economy or not, as you can see, it's a very special tool in the sense that it's unregulated. Commercial banks are very regulated all over the world, and that's a very simple reason for this. Commercial banks are very leveraged animals. For each sort of $1,000 or euros on its assets, they have something like, if they're healthy, 88% of capital. It used to be a lot less on that. So they're very leveraged, and most of the borrowing they have in order to borrow, to lend themselves, most of the borrowing comes from deposits from individuals, from people, you and I. That would have been very expensive if they had to go and compete only based on their financial health. So what the government did and this started essentially in the US, as most things in this sector started in the 30s, 32 and 34 with the Securities Act and the Exchange Act, is that the government guarantees the deposits of the depositors. Now, this is for people like you and I, this only means that if I put money in a bank, I don't care whether it's a good bank or a bad bank, I'm going to get my 100,000 back. In reality, for banks, that's hugely important because it provides a much, much lower cost of funding for them. And as we said, banks are very leveraged animals, so it costs a lot of money to borrow a lot of funds. And if somebody like the government, the Greek government in this case, says, I'm going to stand behind the deposits, this allows them to borrow with 2 and 3 or whatever they borrow these days, as opposed to much, much higher. Because the government does this, it requires a bunch of stuff for the banks. It requires that they are careful, that they have a certain ratio of capital to assets. It requires that they don't put all the money in one investment. It requires that they don't sort of lend money to the favorite shareholder or manager. It's a whole regulatory framework. The same, to a lesser extent, is true in the stock exchange. This is not the case in private equity. Private equity is sophisticated investors. It's their own money. And without, of course, violating the law, they can do whatever they want to do. So it's unregulated. That's the first characteristic of private equity. The second one is that it's opportunistic. It looks at the market, sees where the opportunity is, and invests the money there. It's long-term in terms of investments, but it's very nimble and very able to sort of turn very quickly and identify the good opportunities. Third, it's able to turn a dime. You can change your strategy very, very, very quickly when the market and the needs change, and that's important. Banks cannot be that nimble. Obviously, the other capital markets cannot be that nimble. Private equity is. And the last one is that it is effectively what we would call capitalism at its best. It is optimistic, it's energetic, it's very often contrarian. You see many private equity firms coming and actually buying companies in Greece these days. Not very many banks lend money in Greece. As a matter of fact, no bank, no foreign bank lends money in Greece. And if any of you wants to go to the stock market and take the company public, you realize very soon that you cannot do it. Private equity does. So it's contrarian. And of course, they are proudly focused on making a lot of money for themselves and the investors. In the process, that helps the economy. Before I go further to this and tell you a little bit about what we do, I have also to say that when we talk about private equity, it covers a very wide spectrum of stuff. It is from the venture capital, the stuff that is very best known, the Silicon Valley, effectively companies that have a proof of concept, they have been around for a year or two, but they need money to grow. That's what venture capitalists come in. They give money, they provide usually a lot of guidance, and they lose money on 70% of their investments, but they make 20, 30 times their money on the successful ones. That's the one end. Then, this growth capital, which is what we do and most Greek private equity firms do these days, which is effectively giving money to growing companies to help them continue growing. These leverage buyouts, it's restructurings, which I'm going to see, I believe we have to see a lot coming in the next several years. And then, of course, at the other end is what's called derogatively vulture funds, which is companies going and buying assets at a steep discount, assets of dead companies. So of all this spectrum, what we do, as I mentioned, is growth capital. We provide capital to growing companies with strong fundamentals. We are not doing startups, others do. We don't because we're a small firm and you can be a generalist in growth. You cannot be a generalist in startups. You can do a startup for a biotech company or for an information and communication technology company or for a specific sector. Startups need not only capital, they need advice, they need guidance, they need knowledge. They need expertise. So unless you're somebody a lot smarter than anybody I know, you cannot have this in 1, 2, or 3 individuals. You need to have a much larger group, and we do not have a large group. So we don't do startups. We only focus on growth companies, either that are export-oriented, because we need to have the safety of the ability to sell abroad, and also we don't want to be constrained by the small Greek market. Or what's called the green economy, and that's because, as many of you may know, there is a lot of factors that actually provide significant benefits to companies like recycling and anything that has to do with garbage. I know that some other colleagues of mine have done very successful investments in alternative energy. We haven't, but that's another sector. The funds are provided by individual and institutional investors in our case. Bank is one of them, it's not the most important of them. Most of the funds that we invest are from wealthy individuals and from some institutions. The presence of bank is only important because they know that if the bank gives money out of their own scarce capital these days, then at least they did their best in evaluating the opportunity. So that's another screen for them. But the majority of the funding comes from other sources than the bank. And largely, we acquire large minority interests with strong shareholder agreements. We don't buy control. We think that the Greek economy is way too small to find very good management to replace the existing management. If somebody has built a company and then you give him or her a pile of dough. Usually they go and they buy boats and they have a very nice life, and God bless them. But then you need to find somebody to do what they've been doing, and we don't believe that Greece has the abundance of management to go and replace them. So what we want to do is we want the people who actually worry every night, to lose their sleep every night about growing the business, to continue worrying and lose their sleep and make money for themselves and ourselves. So that's our strategy. This strategy is helped by a number of factors. First of all, I have to tell you, as Stratos mentioned, that although I'm 50-odd years old, this is my first job ever in Greece. All my career was in the US. My first job here started in May of 2010. And this was a strategy, but as you can tell, based on what happened since, obviously, all the factors that sort of made this strategy, I believe, correct, were accentuated by developments. And effectively, what's happening is that, as you know, Greek banks have a problem because the European Union and our government decided in their infinite wisdom that the Greek government is not going to be a trustworthy borrower. So they decided to wipe out 50% of the bonds, of the government bonds, that the Greek government and the Bank of International Settlement told them that it has no risk and they should put no capital for them. So the banks had to recapitalize themselves. So some of them, before the Ταμείο Χρηματοπιστωτικής Σταθερότητας gave them $20 billion, they had negative capital. One way to keep that 8% we're talking about is to put some more capital. Another is to reduce the basis, to reduce your assets. And since there's no overwhelming desire by foreign investors to invest in Greek banks these days, what they have to do, and what banks are doing, is they're reducing the balance sheet, which means they have to reduce the loans, because most of the assets of banks are loans. So that's the first thing. If you have $1,000 of assets and you have $80 of capital and now you have $2 of capital, you try to find a few more dollars of capital, but then you have to take the 1,000 to something much lower. Now, what you do, the second thing is they have to go to clients or customers that have been lending money for 20 years and say, you know, XYZ, good company that is making money and have a good management, and we like you, and you've been a client for many years. You have a 30 million loan, now it's going to be 15. They couldn't, you would struggle them. They would die. So what they do is they try as much to reduce it at less than in the example I gave you, but they keep on funding and refinancing the loans for the existing clients. So you have, at the same time, you have to reduce your loans, and you try very hard not to completely eliminate or reduce very sharply the loans of the existing clients. This means that since they focus on the existing portfolio, that it's very little left for expansion capital, for companies that want to grow. If somebody in my example said, well, thank you, I have 30 million, but now I need to build another factory and hire more people, or I need to export because I have orders from Germany. I can actually sell everything that this factory produces. Would you lend me another 10 million? The answer is absolutely no. You must be out of your mind. So they have, especially the SMEs, and most of the Greek companies are SMEs, they have a huge problem to fund the growth. Now, this is further accentuated because, as you know, the last couple of years, a few things happen in the Greek economy. The first is that everybody is sort of trying to save some money, and they say, well, I'm not going to pay you today, I'm going to pay you in a month, or I'm not going to pay you in 2 months as I used to pay, I'm going to give you a check for 6 months. So we have an expansion of the receivables. Companies take much longer to get the money. At the same time, there is a resistance to extend the payables, and even Greek companies demand cash up front most of the time. And when we're talking about foreign suppliers, since they are usually run by intelligent human beings, they said, listen, if your government officially says that I'm a bad creditor, you bet your sweet behind I'm not going to trust you. So they ask for cash in advance. And they're right, we complain, but It's us, it's our government that says through the PSI that I am going officially to go and say the whole world that I'm a bad creditor. So people assume that Greece is not to be trusted, as that lady said correctly, and therefore foreign suppliers of raw material, they say, I'm going to have cash up front, otherwise I'm not going to sell you. All of this now makes life miserable for small and medium enterprises. And if you add the fact that the Greek government also doesn't pay the money that's owed, either returning FPA or all the other stuff or subsidies, life is miserable. So this is an opportunity for us, and that's sort of where the private sector can come and help the economy. So what we do, what we try to do, we try to identify some of the best growth companies with strong fundamentals. In this very, very difficult time for the Greek economy and all the risks that we have, and the fact that the bank certainly cannot give us as much money as they did in the past, and the fact that there's risk and there's all of that, you have one thing going for you, that you can go and select the very, very, very best companies, because there are so many of them that need that. If you go and have a sign in Syntagma Square saying that I am willing to finance growth companies, and please come to my office, you're going to have a line around the block. There are many, many companies that need it because nobody else does. Banks don't, nobody else does. So you can find the very best companies, or you try to find the very best companies. We do a very exhaustive due diligence to understand the dynamics and the risks. We provide adequate capital. We don't believe that, if somebody needs $10 million, we give them 9. If somebody needs $10 million, you give them 11, because chances are they will need more. And then, of course, being private equity, not banks or other regulated institutions, we can tailor and structure the financing and other services to specific needs. And of course, we are long-term oriented. We expect to stay for 4 or 5 years, and because of that, we expect to get at least a 30% IRR. So that's what we do. We have been lucky enough to have 4 investments the last 24 months. The first is Mesoios, which is a waste and water resource company.
You have another 2 minutes if you...
I need less than 2 minutes.
Thank you.
We have already made money on this, in the sense that if you take public market valuation, we have a pretty good return. NGP Plastic is a production of specialized micro-packaging and 70% exporting. MLS Multimedia, that's a terrific company, and Yacht is the general manager is here. It's a wonderful company. It's export-oriented. It's going to be much, much more export-oriented in the next several years. If they do 50% of what they should be doing, they should grow like wildfire. It's a terrific company. And then hopefully in the next week or so, we are going to invest in a waste management company with emphasis on recycling plants. My last minute before of the 2 that Stratos mentioned, this is just one sector. Probably you're not interested if you are a startup. The good news is that there is another one that I know of. Actually, there are more than one. I know that others are investing in similar situations, but the EIF sponsored and helped companies that are willing to invest in communication and information technology. And one of the companies that we put money in, it's run by a gentleman that spent many, many years in Silicon Valley very successfully financing companies of that nature. It's called Odyssey Venture Fund. They have 30 to 40 million of gunpowder, and they are focusing on startups on that sector. Not only they have the money, but they have 30 years of experience in helping companies in the Silicon Valley. And there are others I know that are doing the same thing. So things are happening, and the answer to the question is yes, absolutely, private equity knowledge forms can help the Greek economy if the Greek economy is willing to help itself. Thank you.
Thank you.